Happy Diwali, everyone. Welcome to a special episode of Indian Market in Minutes brought to you by Motilal Oswal. This one's special because Diwali is around the corner, and today we're thrilled to have Mr. Chandan Taparia, Head of Technical and Derivatives Research Desk, with us, an expert in the field here to offer his insights on the current market environment and guide us through these tough times. Let's dive in and make sense of what's happening as well as spot opportunities in this market. Chandan sir, Nifty has been slipping recently. How would you describe the current market, and are these positives for investors to look out for?
Thanks, Shivangi. Wish everyone happy Diwali. Talking about market, yes, Nifty has seen a correction, but it also presenting opportunity in select sectors. For instance, IT and capital market stocks shows promise even now, as these sectors have demonstrated resilience in past correction and could serve as solid investment going forward. Every downturn presents a buying chance, and for those with a long-term outlook, this period could be an ideal time to add quality stocks at comparative discount price in the market.
With Diwali approaching, many are eager, but they're also a little bit concerned about their current portfolio conditions. I mean, how would you advise our listeners at this time?
I would say it's natural to feel anxious with portfolios reflecting some rate, especially as both large and mid-cap stocks are facing pressure. However, market correction are a part of this journey. This Diwali is about staying optimistic and seeing beyond the current volatility. With many stocks trading at a discount, long-term investor can view this as an opportunity to add quality names to their portfolios.
So, are there any specific sectors that you're looking out for, or are you suggesting to consider accumulating during this recent correction that the market has given?
Absolutely. IT and capital market sector are among my top picks right now. They have growth potential and are currently well positioned for those looking to make the most of this dip.
Since you mentioned the capital market stocks, do you feel that the recent correction might impact the growth in the demat account openings?
While sentiment might be affected in the short term, I believe the interest in equity markets will continue to be strong. The good part is that Indian retail investors understand the value of equities, so I expect any pause to be temporary, with investor eventually seeing these declines as a buying opportunities.
So, on the other hand, which sectors would you recommend having a little bit of a caution at this point of time and to wait a little with patience?
I would suggest avoiding PSUs and oil marketing companies for now, as these areas tend to see more volatility and may have further downside in the near term.
All right, so this was about the sectors, but with the Muhurat trading on November 1st, what would be your outlook for allocations from this Diwali to the next one?
So Muhurat trading is a wonderful tradition symbolizing a fresh start. I would advise listeners to continue their investment journey, especially as we navigate these uncertain times. Look at asset allocations, sector rotation, and gradual accumulation, particularly in IT, capital market, and selective auto stocks. Over the long term, these kind of strategies have the potential to deliver solid returns.
Thank you so much, Chandan sir, for your rich and valuable insights. Now, to conclude this podcast, here are 3 takeaways for our listeners. Stay invested in quality stocks. The recent decline will end soon to commence the next leg of rally in the market. So the focus should be on good names like IT, capital markets, selective banks, and auto stocks to build your portfolio. This is it for now, but follow our podcast Indian Market in Minutes, Monday to Friday, early in the morning. Shivangi Sarda signing off. Follow this podcast for solid advice. Investment and securities market are subject to market risk. Read all the related documents carefully before investing.